Veronica, we're about halfway through 2025, and the S&P keeps hitting new highs. So before we look ahead, what are your thoughts on what we've seen so far in the market?
I think what we've seen so far this year is a really good reminder that volatility doesn't mean we're just moving down. So we've had a year full of whipsaws. There have been ups and downs as the markets grapples with a lot of geopolitical, trade, and policy uncertainties.
And now let's look ahead. What concerns do you have with the market here at these new highs?
Investors may have gotten a little bit ahead of themselves at this point. I think the market reaching new highs does not necessarily mean that the volatility and the uncertainty is behind us. I think we're in for a rocky second half of the year as economic growth slows and as we still navigate a lot of uncertainties.
Can you talk a little bit more about your thoughts on the economy, economic growth? How much slower can it get?
Yeah, we think we're going through a little bit of a slow patch here, and maybe late in this year and into 2026, we'll eventually see economic growth recover. With prices being a little stickier, inflation's a little bit higher than the Fed wants it. So we think that's going to be a little bit of a drag on the economy.
All right. So where are the biggest opportunities in the second half of 2025?
Yeah, I think the biggest opportunities are thinking about higher quality. So we really like large caps right now. We really like mid caps more than we like the small cap space. I think those will be a little bit more resilient as we're navigating uncertainties and as growth slows down.
What about particular sectors? Do you like tech? Do you like gold if you want to go for another asset class? It's done awfully well over the last year.
Yeah, so sector-wise, we do like tech. We also like communication services, financials, energy, and utilities. So we think, some of those sectors are going to do well with the AI play. It's not only a tech play. So we think, energy, industrials, comm services can all do well with AI. And utilities is a little bit more of a defensive play. But as I said, I think we're going to have some uncertainties there. So it's good to think about that. And then outside of the, traditional stock market, we do like commodities right now. So we like energy and we like precious metals. I think those are both good ways to play.
And which areas should investors stay away from?
Yeah, so staying away from some of those lower quality, higher risk areas. So things like emerging markets, we'd stay away from that, focus on the US or developed market equities over emerging market equities. And then the small cap space, I'd be a little bit wary of small caps. They haven't done as well as large caps and mid caps here. And we think that they're poised to struggle a lot more under the economic environment.
And then finally, speaking of the economic environment, I know you're watching it, but Fed Chairman Jerome Powell is watching it as well. What are your expectations for the Federal Reserve?
Yeah, we think the Fed will have the opportunity to cut rates twice between now and the end of 2026. So we're thinking maybe one this year and one next year. The market is probably a little ahead of themselves with their expectations for, a lot of cuts through the end of 2026. But under that scenario, we'd have to see much slower economic growth than what we're expecting. So we think with the slowdown in growth, the Fed will have that opportunity to cut rates twice.
All right. Well, thanks for coming on and talking about it.
Thank you so much.